Hello everyone and welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, we're putting the spotlight on Apple, ticker symbol Apple, a stock that has seen significant movement and generated a lot of buzz recently. As of July 24, 2025, the news highlights that Apple stock is down 14.5% year-to-date, signaling a challenging period for the tech giant. Analyst ratings are mixed, with many maintaining hold or neutral positions, reflecting uncertainty. However, the average 12-month price target from Wall Street analysts stands at $227.27, suggesting a potential upside of approximately 6% from recent prices. The market is keenly awaiting Apple's fall product lineup, especially the iPhone 17 family, which is expected to be a major catalyst. Additionally, the company's Q3 earnings report is just around the corner, scheduled for July 31, 2025. On the regulatory front, UK regulators are scrutinizing Apple's mobile platforms, which could impose new requirements, but EU regulators are likely to approve App Store fee changes. Adding to the mixed signals, there was a significant drop in iPhone demand in June, according to UBS analysts, yet Apple's App Store revenue has shown acceleration month-to-date in July. Fundstrat's Tom Lee even suggests Apple might surprise Wall Street with its AI efforts, indicating potential hidden strengths. All these external factors contribute to the overall sentiment and volatility you can observe on the daily chart. Looking at the daily chart from March 2024 to the present, we see a broader uptrend through the end of 2024. However, the year 2025 has brought more volatility, with the price retreating from its higher levels. This overall journey reflects the push and pull of positive developments against market concerns. Now, let's narrow our focus to a particularly dramatic period on the daily chart, the sharp sell-off and subsequent rebound in early April 2025. During this time frame, Apple experienced a significant drop, plunging from around $223 to a low of approximately $169. This rapid descent was accompanied by extremely high trading volumes, indicating strong selling pressure and widespread investor concern. However, following this steep decline, the stock saw an equally impressive, rapid rebound, surging back towards the $200 mark. This reversal suggests robust buying interest emerged at those lower price levels, effectively creating a strong support zone. While we don't have specific news events tied to this exact period, it illustrates how major market corrections can present significant buying opportunities for those willing to take on risk. The $170 level now stands as a crucial long-term support, a line in the sand that bulls will fiercely defend. Returning to the full daily chart, we can observe the stock's performance after that significant April rebound. Apple has since recovered substantially, rallying to consolidate around the $210 to $215 range. However, the previous highs around $250 to $260, seen in late 2024, now represent major resistance levels that Apple needs to overcome to reclaim its bullish momentum. The price has been struggling to make new highs, indicating a period of consolidation or even a potential downtrend in the short to medium term. Currently, AAPL's closing price of $214.15 remains below the average analyst target of $227.27, leaving room for a potential upside. The news also mentions that the stock is trading below its 200-day moving average, which is generally considered a negative technical indicator for long-term trends. Immediate resistance can be identified around the $220 mark, which has acted as a ceiling in recent price action. Shifting our view to the one-hour chart, we gain a more granular perspective on AAPL's recent movements in early July 2025. We can observe a period of relative stability with a slight upward bias, maintaining prices largely above $210. The stock reached a short-term peak around $216 on July 7, after which it encountered minor resistance and began to retrace. Following this peak, Apple entered a phase of consolidation, trading primarily between $209 and $212 for several days. Volume patterns on this time frame show that the initial upward moves often occurred on higher volume, while consolidation phases tended to see reduced trading activity. This suggests a lack of strong conviction from either buyers or sellers during these calmer periods. The $209 to $210 range has proven to be a reliable short-term support level on this hourly chart. Let's zoom in further to the 15-minute chart to analyze the immediate price action, particularly the intraday dip observed on July 23, 2025. The chart clearly shows a sharp decline on July 23, with the price falling from a high of around $215.5 to a low of $212.4. This quick drop could be a reaction to the earlier news about the significant decrease in iPhone demand during June, as markets often react swiftly to such reports. It highlights how negative fundamental news can translate into immediate selling pressure on shorter timeframes, potentially triggering stop losses. While there was a slight recovery towards the end of the July 23 15-minute data, the overall daily close for July 23 on the daily chart was still lower at $214.15. For day traders, this rapid intraday movement created a clear support level at $212.4 and an immediate resistance at $215.5, highlighting key short-term boundaries to watch. Such volatility emphasizes the need for close monitoring and quick decision-making in intraday trading. Bringing it all back to the daily chart for our final overview, let's summarize the key arguments and price levels for Apple. Reasons to be bullish include the optimistic average analyst price target of $227.27, hinting at future growth potential. The possibility of Apple surprising with strong AI developments, as suggested by Fundstrat's Tom Lee, could ignite a rally. Accelerating App Store revenue in July also provides a positive fundamental underpinning. Lastly, the highly anticipated iPhone 17 family and fall product lineup present significant upcoming catalysts. Conversely, reasons to be bearish include the stock's current 14.5% year-to-date decline and trading below its 200-day moving average, signaling technical weakness. The reported significant drop in iPhone demand in June is a direct concern for revenue. Ongoing UK regulatory scrutiny and potential tariff risks add layers of uncertainty. And don't forget the broader market caution about Apple's long-term muscle beyond current momentum. In terms of key price levels, the long-term support lies firmly around $170, established during the April 2025 rebound. Intermediate support levels to watch are in the $200 to $205 range, which has seen some consolidation and psychological buying interest. Immediate resistance is currently at $215 to $220, where the price has recently stalled and reversed. Major resistance levels, representing previous highs, are found at $230 to $235 from January 2025, and then significantly higher at $250 to $260. The peak observed in late 2024. For unbiased predictions, the likelihood of testing the $220 to $225 range is high, probably 60 to 70%, especially if the upcoming earnings are strong or favorable AI news breaks. The probability of retesting the $230 to $235 level is moderate, around 40 to 50%, requiring significant positive catalysts and sustained buying momentum. Conversely, a break below the $190 to $200 support range is moderately likely, about 30 to 40%, if earnings disappoint or regulatory pressures intensify. Key things to look for in the coming days and weeks are the Q3 earnings report on July 31st, any leaks or official announcements regarding the iPhone 17, further updates on Apple's AI strategy, and the outcomes of regulatory discussions. These events will dictate the next major move for Apple. Remember, informed trading decisions combine fundamental understanding with precise technical analysis. Always manage your risk effectively.